Ladies and gentlemen, are we ready? Thank you. You know, in Asia, the person we revere most are our parents. After that, we revere most our teachers. And this morning, I have the greatest pleasure to introduce a teacher of teachers. Professor Stanley Fischer is currently Distinguished Fellow at the Council on Foreign Relations, but he is the author of 3 textbooks on economics, and in his career with LSE, there's MIT, Chicago, Hebrew University. A little unknown fact is that if you think Ben Bernanke is bright, Stan Fischer was his thesis advisor. Stan has had a fantastic career. He was my boss at the World Bank, and then from the World Bank he moved across the street to IMF, and he was the key point man handling the Asian financial crisis. And he's the most unflappable guy I've ever come across. With crises all over the place, cool as they come, sharp as they want, very clear in decision making, and the fact that we got out of that crisis pretty fast, we owe it a lot to Stan. But then he became, after leaving the IMF, he went to Citibank and then became governor at the Bank of Israel. And he reminds me that Israel is also part of Asia. So ladies and gentlemen, my great pleasure this morning to welcome Stan Fischer.
Well, ladies and gentlemen, it's a great pleasure for me to be here. Really, one always says that, but it really is a great pleasure for 2 reasons. One of them is that I've known Victor Fung for a long time. He also has an MIT background, and that immediately creates a bond. In addition to that, I've known him because of the many achievements he has, and I've just met William as well. And I've known Andrew, as he says, for 25 years, since he was a young and clearly coming analyst of banking systems and financial systems at the World Bank. And we've stayed in touch since then. So it's a pleasure to be here for personal reasons. But it's also a pleasure for another reason, and I want to talk about this a bit more even than has been talked about so far. And that is, this is a very important institution, and I want to explain why it's an important institution. For many years, the center of the global economy, the center of gravity of the global economy, has been moving toward Asia. And Asian countries and other developing countries have rightly been demanding a greater say in the governance of the global economy. Now, some of that say has taken place through the creation of the G20 as a replacement for the G7, which I used to think of as the executive committee of the global economy. Now the executive committee has 20 members. But that's a step in the right direction. There is also proposals that emerging countries should have a larger share of the vote at the IMF. Those discussions are one of the great miracles of arithmetic, because the only way they could actually succeed is if the sum of the shares was greater than 100%. Since everybody's willing to have more, nobody's willing to have less, and it goes on and on, forever, but it will take place slowly, and gradually emerging countries will have a larger share. But, and this is, I think, a crucial point, voting shares and a say are not all that matters. It matters even more what ideas you bring to the table. And for that, the countries that want to have a greater say in the global economy need to develop their ideas and their proposals about how to change the system. And I can quote the Fung Institute itself in the report Asia Finance 2020, which says exactly what needed saying. Asia has yet to make a strong mark as architect of its own financial order, let alone finding its role in the new international financial order. In other words, although the financial crisis has underlined the importance of Asia as a global stakeholder, the emergence of Asia's thought leadership on global governance and financial architecture is occurring at a slower pace, even if many acknowledge the urgency and importance of the task. Those things don't just happen. They happen through research, they happen through discussion, they happen through hard work, and that's what this institution reflects. And it's going to be much more important than this particular meeting. It's going to be important if it can become a center of thought, a global center of thought about how the global economy should work. And that's what I think I see in the discussions that are being organized today and in the agenda that's been chosen. So I would like to congratulate the Fung brothers, those who support them. I listened to what Stuart Gulliver said, and I've listened to what Mike Spence said about this institution. And it's absolutely true, and it's probably more important even than we realize. And I can never get through a lecture without quoting Keynes. So I want to quote Keynes, if my iPhone will let me do that. Well, suddenly decided I should add VIP, but I'm not sure what they have to do with this. It says cannot get mail. Let me tell you what I want to quote Keynes on. Keynes, at the very end of the general theory, which really changed our approach to economic policy, has a sentence which says that madmen in authority, I always feel good when I think of myself as one of them, madmen in authority are listening to the voices that they heard 30 to 40 years ago. Then he goes on to the power of ideas. And what he says about the power of ideas is that ideas for the long run, over the long term, are more important than interests, than national interests. New people come in, new ideas are developed, the world changes, but it doesn't change without the ideas. And he is writing his own obituary in a way, says at the end that there is nothing more important in the long run than new ideas, and that is what we all hope will come out of this institution and out of Asia. Now I have to apologize, and for that I'm very grateful to have been invited to be here. Now, the communications between the Fung Institute and myself were not perfect, and I discovered this morning that I was supposed to have given an address on what have we learned from the Great Recession and how relevant are those lessons to the new problems we may face. Well, on page 1 of my lecture it says, can a global architecture work for finance? So I'm going to talk about the question I was first given. Can a global architecture work for finance? And if there's time for questions, we can discuss what we've learned from the global recession. Well, the question, can a global architecture work for finance, is something I want to answer up front. And the answer is, of course not. Countries are far too diverse for one size to fit all. And you could develop that answer. But there's another equally valid answer. Of course, we must have a structure for international financial transactions that can accommodate the diverse needs of different countries, from the most advanced, which are already tightly linked to global financial systems and which trade and invest globally, to those already on the path towards being highly developed as the emerging market countries in this area, and to those struggling to find their way to that path. And so we have to find a way of allowing the diversity, which was talked about a little earlier, about the difference between the Asian banking systems and other banking systems because their sources of finance differ. But as soon as you analyze that and realize that, you can start making a set of rules that will apply to everybody in the end. So now I've been talking at a high level of generality, but we cannot resolve the problems that the Great Recession has once again exposed by talking about generalities. We've got to get down to concrete problems. There are many concrete problems at the moment. Underlying them is the remarkable fragility of financial systems, national and international. And you can ask why they are fragile, and the answer is very simple. They're first built on trust, and trust is fragile. And secondly, they're built on expectations and judgments about the future, about which we do not know, and about whose ignorance we're kind of reluctant to tell the whole truth. That's also by the way, in the general theory. What do we know? What can we possibly know about the economics of a great ocean liner that has just been launched, whose life is expected to be 30 to 50 years? Well, we price them. We price the companies that run them. But the degree of ignorance is really quite remarkable. Now, why do we have these crises? We have these crises because we succeed in persuading ourselves that, and here I quote Reinhardt and Rogoff, this time it's different. So bubbles are developing, and I'm not talking about the present, possibly. Bubbles are developing, and you will say to yourself, well, this time it's different. I've heard it in different ways in different countries. In other countries, they sometimes say, not this time it's different, but among us it's different. We don't suffer from those things until they do. Or we are different, but we're not. We're all subject to the phenomena that have produced financial crises. As Reinhardt and Rogoff tell us, over 800 years, and no doubt longer if we had the data. So what to do? Well, what we're trying to do, or what the international system is trying to do now through the Financial Stability Board, through the Basel Committee, is to buttress the trust and strengthen it by increasing capital requirements. And here I recommend to you to take a look at a book by Anat Admati and Martin Hellwig called The Banker's New Clothes. The bankers don't like this book because it says that requiring more capital doesn't necessarily force you to reduce the amount of loans you give. And it explains that that capital is a way of financing, lending. It is not it is not something like liquidity, which constrains what you have to hold on the asset side of the balance sheet. We're trying to buttress the amount of liquidity. Collateral rules are being changed. Supervision has not received the attention it should receive. This crisis, to a considerable extent, was a crisis as well, or a failure as well, of supervision. But not a whole lot has been done on how supervision should be changed. We try to buttress the trust by recognizing that there is a lender of last resort. And I think we should not allow ourselves to imagine that we're going to get rid of the lender of last resort. And if that's what people think, that's a mistake. And of course, there's the work on resolution mechanisms. Now, much of the work that has come out of Basel, both the Financial Stability Board and the Basel Committee itself, relates to all the above. And the question is it working? Is it going to work? Well, there's a lot of progress, but there are also a lot of problems. There are divergences between what's going on in different countries. There's the problem, again mentioned in the previous session, of the difference between accounting systems of GAAP versus IFRS. It is recognized and admitted that there isn't a solution yet for resolution mechanisms for SIFIs and particularly for G-SIFIs. This is a big issue. And there's another simple truth. We won't know whether these systems work until they have stress tests, but stress tests of reality and not the ones we design on paper. Now, the stress tests that are being done now are critical. You learn an enormous amount from them, but you do not learn enough to know whether they will work in a crisis. I particularly noticed, and again, I don't want to pick on people or institutions, but we've got to look at reality. The Financial Stability Authority in the United Kingdom was thought from 1997 onwards to be a very important development in the way we should all go. A few people said, yeah, but it hasn't been through a crisis yet. But most people liked it on design. The Bank of England is the English financial system is thought of as one of the greatest, and it's certainly got the most interesting history of any financial system. It was thought it was bound to be successful. Well, it wasn't. And with that institutional innovation, and there are many complicated reasons why it happened, the United Kingdom had the first runs on banks in 140 years. So one has to recognize that we don't know. We've just got to make our systems as safe as we can. What are the problems that are, still need to be dealt with? There are other problems of the international banks. What they call the efficient allocation of capital. I read in the press frequently that banks have to be able to allocate their capital efficiently. What this means is that they can move it around between countries when crisis comes. And this is not actually typically helpful to the countries from which the capital is being removed as the crisis starts. And the proposed solution to that is one of subsidiarization rather than branch banking. And I think the world is moving in that direction. Another problem we haven't solved is that of short-term capital flows. Now, the very largest countries don't particularly have this problem because their markets are deep enough and strong enough for them not to be pushed around too much by short-term capital flows. But small countries are very heavily affected by these movements. And when, to take an example I dealt with, when an economy of $250 billion, which is the Israeli economy, was seen as interesting, you only had to get a few guys to find that a good story, to have inflows coming in at a stage which really would have moved the economy around and moved it into very inefficient areas. And we don't have recognized ways yet of dealing with capital inflows, although capital controls are more and more acceptable. The only problem with capital controls is they're very untidy and they lose their efficiency fairly quickly. In thinking about all these things and banks that get into trouble, I remember Mervyn King's saying, which is approximately, big banks are global in good times and national in bad times. If a big bank gets into trouble, the home regulators are going to try to get as much money as they can into that bank from wherever they can get it, because otherwise they're going to have to find some way of explaining why public money has to come into it. So this is a problem for capital. This is a problem for banking systems. It is related to a problem which is on the agenda of the capital of banking 2020, Asian Finance 2020 of the Fung Institute, where there's going to be a concentration on safeguarding trade finance in future crises, and that's a very closely related issue. Let me mention a few others which have already been discussed. SME financing. The Asia Finance 2020 says that finance in Asia has to change because the future will not be based on the old industrial export-driven model, but a new model, one which focuses on domestic demand, on domestic consumption, more socially just and environmentally sustainable approach. And it defines the three growth pillars as SMEs, infrastructure, and trade. SME financing is very difficult to do. I believe that it, more than any other aspect of banking, requires local knowledge and is not particularly well suited for big global banks who come in and believe that they can do that quite easily. You really have to know who the borrower is and what the borrower is like and what the business is about. The proposal for Asia Finance 2020 also talks about the development of more complete financial systems in Asia. I think that's very necessary. I'd be surprised if there are huge developments within 6 years. And finally, internationalization of the renminbi and the rupee are both mentioned in Asian Finance 2020. I think that too was analyzed correctly earlier in the previous session. Don't rush too fast to want to have currencies as reserve currencies. If you don't have a very robust financial system, having a reserve currency is a problem and can be a problem, and everybody should remember that Germany, which is very cautious in the financial area, did not want the Deutschmark to be a reserve currency and kept trying to prevent any moves that would take it in that direction. When I was in the IMF and we had to get a currency for Bosnia, and they wanted to go into a currency board using the Deutschmark, there was no enthusiasm from those from the Germans on that issue. And I assume the Swiss are also not particularly happy that their currency is something that a lot of countries want to hold in their reserves. So that's something that has to be taken slowly and carefully, though, as Stuart said, the renminbi will doubtless be used in a lot of transactions. Now, I want to end by going back to the importance of this institution and suggesting that focusing only on Asia is too restrictive for an agency like this, because the voice of Asia has to be heard in global discussions. There will be lessons from Asia for the world, and there are also lessons for the world from Asia. Many of the issues that are raised in the Asia 2020, Asia Finance 2020, are issues which are being discussed for different reasons in the context of the European Monetary Union and in the context of Europe. There is one other reason to think about why Asia might want to think more about operating in a global area, and why this institution might think about that. It is often said that the way to solve a problem, if you have a hard problem, is to embed it in a larger problem. And it's entirely possible that some of the difficulties that will arise in implementing the vision that is contained in the goals of Asia Finance 2020 will be easier to resolve in a global context than in an Asian context, where Asian rivalries will be quite central and where there might be ways of dissipating that tension by doing it in a broader forum. So with that, let me again say this has been a pleasure and an honor to be here, and to say to Asians and to the Fung Institute that however you do it, good luck. Thank you.
Thank you, Stan. Well, we have time for a few questions, but as moderator, let me start off with a couple of questions. I think the first one, now that you've moved from the academia to development institutions, IMF, then to banking, and then into regulatory side, how do you see the issues that we're now quite concerned about? You know, finance is a fine industry. You find them 2.3 billion, you find them 13 billion. Where's all that finance going? I mean, how do you see this? You know, how do we build this bridge between industry and the regulation so that we get more regulatory certainty in the future?
Well, I'm not sure that finance in the long run is going to be fined at the rate it's being fined right now. I was surprised that after the global crisis, there was very little attempt to deal with the bankers, who did make a lot of mistakes. Now, if they were legal mistakes, fine, but things are coming out which don't look terrific at the moment. I think the LIBOR events, and now we're going to have to deal with the foreign exchange events, foreign exchange pricing events, are such that there have to be strong disincentives to ever do that sort of thing again. It will happen at some point, but we need to buy a period of 20 or 30 years where people remember these things. So I don't think that's a long-term feature. I think it's a feature about what has happened up to now, and it'll quieten down, in part because the behavior that caused these fines will disappear, I hope.
Thank you. The second issue is about, first of all, I must apologize for the miscommunication, but everything you've said, we've taken to heart. The issue about Asia, I think, we've, I think Dr. Victor Fung, all of us, created this institution, not just for Asia, but to really look at global issues. How does it impact on Asia? And what maybe we should start having more dialogue with each other. That's the whole purpose of this dialogue, right? And Asia is very clearly not one view. But it's quite clear. Today, post the crisis, there is no one view, right? Not within Asia, not globally. And what we find today in Asia is that increasingly talking to the, our friends in the Fed, increasingly a lot of the Fed policies are concerned more with the United States, quite rightly so, but it has global spillover issues, particularly in emerging markets in Asia. How, you've already talked about this capital flows issue. How should we have a better dialogue on getting, we will never have a global central bank, right? That's politically relevant. But how do we get a better dialogue on this global spillover issues? How do you think we should move forward on this?
Well, I haven't been, when I was in the IMF, I used to go to the Financial Stability Forum where these issues could have been discussed. Now, I assume they can be discussed in the Financial Stability Board, and that would be the place for those issues to be raised. And always the question is, can you come with solutions? Because you got to get along much better if you have ideas, even ideas which people will reject, but at least get them into the mode of thinking about something, and they'll come up with a variation that may work. So I would think those would be the places. And a meeting like this, there seem to be a lot of very distinguished people in this room, certainly many people that I've known over the years are here, and you can get this going, but at some point it has to go back into the official channels.
Thank you. Okay, open up for questions. Linda? Yeah. Linda was former executive director of the ADB, Ambassador Linda Cao Yang.
Thank you very much. I want to come back to the second of the four items that Victor mentioned, and that is the Federal Reserve's QE. In September, they decided they're going to let it go on for some indefinite future, depending on the data that they get. But just a few months before that, when Bernanke just whispered the word taper, well, the whole emerging markets, capital market, were just, took a nosedive, tremendously destabilizing the emerging markets. Okay, I also want to refer to what Mr. Gulliver said, that he thinks in 5 years' time, the renminbi will be number 2 or number 3, the most traded currency globally. Now, I'd like to give 2 more years to Mr. Gulliver's idea, say 2020, give it 7 years. Okay. Now, I agree with Keynes that anything of significant change takes a long, long time. But you also said that in the long term, we are all dead. So we cannot wait that long. So as a result, say if we look up to 2020, okay, if the renminbi does get to the point of a significant number 2 currency around the world, how would that impact the exorbitant privilege of the US dollar as the one and only international currency reserve? Because what the Fed is doing now is because of that exorbitant privilege. So when Washington was asked once, do you care about the impact on the rest of the world? And the answer was, that's something they have to manage. So by 2020, would they be able to say the same thing again? Thank you.
Thank you. Stan?
Well, the world economy is becoming more decentralized, or at least with more centers. And China is clearly going to be the second economy in the world and may by the way, I thought that Keynes got it wrong. The right statement is, in the end, we are each dead, but we're not all dead. So there'll be somebody around when the renminbi gets there. I mean, it will reduce the amount of seigniorage that the U.S. gains by having the dollar held in reserves. It's about 60. The percentage was going down, and as the euro problem got worse, sort of stabilized, gone up a little bit, but about 65%. So it'll go down. It'll go down to 50%, possibly, and possibly lower if the whole financial system in China becomes much more sophisticated and much more flexible. That'll happen. It's not going to be the end of the world. It's a situation which existed 100 years ago when sterling was more important than the dollar, and U.S. will get used to it. It's an important privilege. It's not critical to the U.S.
All right, one question over there. Last question, I'm afraid. Time constraints.
What do you think of the suggestions to do away the regulation that was introduced in the aftermath of the financial crisis in order to stimulate growth? What about, would we be creating another crisis if we do that?
Which regulations?
No, all sorts of financial regulations that were to tighten up the regulations so as to take away the excess incentive for risk-taking. So there seems to be some suggestion that we should do with that if we want to, have a quicker recovery. So what do you think of such suggestions to roll back regulation?
Well, I think that's not a good idea, and I don't quite understand the logic. The logic said the reason these regulations were tightened up was that in the period leading up to 2007, they helped create an excessive boom and very unsafe lending practices. They created huge vulnerabilities in the financial system, and I don't think you should be trying to do that again. It's just too risky. And playing the game of going for more leverage because it's easier and you can get away with it for a few years seems to me a very short-sighted policy, and shouldn't be done.
Well, I think I'm sorry, time constraints, but you will have another opportunity to ask, Stan, the next session, which will start, I think, in about 11:30. Am I correct? Colleen, please correct me if I'm wrong. But on behalf of everybody, I want to thank Stan for his wisdom, insight, great advice, and carry on the dialogue, between industry and regulators and all of us, Asia and the world. Thank you very much indeed, Stan.
Thank you
for coming on us. I particularly want to thank Mark Tucker from AIA, who's managed to help you get us here. Thank you. Thanks. So next.